Imagine this for a moment. It's October 1st, 2025. You're sipping your morning coffee, scrolling through your email, and suddenly you notice a message from Navy Federal. It says your credit card terms have changed. You open it, and you realize something as simple as taking a cash advance could cost you more than you ever thought. Have you ever had that moment where you feel like the rules just shifted, and no one asked for your permission first? Hi, friends, and welcome back to Smart Money Streams. Today, we need to have a very real conversation about Navy Federal's new credit card changes, what they mean for you, and how to navigate this without falling into the traps that so many people do. You see, this isn't just a Navy Fed thing. Across the country, credit card delinquency is on the rise. People are leaning on credit just to bridge the gap. Groceries, rent, emergencies. And banks? They're paying attention. One of my clients once shared with me how he thought having a $20,000 credit limit was a badge of honor, until his limit got cut overnight because he kept running his balance close to max. It shook him, not just financially but emotionally. It made him feel like his lender didn't trust him anymore. And now, with this change, Navy Fed is tightening the reins. So let's talk about what's actually happening. Starting October 1st, 2025, Navy Fed is switching to a fixed cash advance APR of 18%. Now, if you've never taken a cash advance, you might shrug this off. But here's what many people don't realize. Cash advances are some of the most expensive money you can borrow. Unlike regular purchases, there is no grace period. Interest starts the very day you take out that cash. And it compounds. Interest on top of interest until you've paid every penny back. So imagine this. You take $1,000 out today to cover an unexpected bill. If you don't pay it back quickly, that $1,000 could easily turn into $1,150, $1,200, or more. That's money you worked hard for, vanishing just because of timing. And it's not just about cash advances. Navy Fed is also clarifying when they can adjust your credit limit. If you're only making minimum payments or running your card close to max, you may be at risk for a limit cut, or even an account closure. This is happening across the industry because banks are managing risk. It's not personal, but it feels personal, doesn't it? Have you ever felt that knot in your stomach when you see your credit limit drop, and suddenly your utilization spikes, making your credit score take a hit? That's the reality many Americans are facing. So what do we do about it? First, if you absolutely must use a cash advance, be strategic. One of the smartest ways I've seen, and yes, Navy Fed allows this, is transferring that money to their Go prepaid card. It's treated as a purchase, which gives you a grace period and can save you from that day one interest hit. But let me be real with you, relying on this regularly is a sign that something deeper needs attention. Cash advances are a signal that you might need an emergency fund, even a small one. I tell my clients, start with $500 or $1,000, enough to cover life's little surprises so you're not forced to borrow at 18% interest. And if you can, review your credit cards every quarter. Check your terms, ask for a limit increase if you've been managing your account well, and make sure you're not accidentally creeping too close to maxing out your cards. I want you to imagine something with me. Imagine how it would feel 6 months from now to have enough cash saved that you never even have to think about a cash advance again. Imagine checking your credit report and seeing your utilization under 10%, your score climbing, your financial confidence growing. That is not a dream. It's a choice you make today. At the end of the day, these Navy Fed changes aren't meant to scare you. They're a wake-up call. A reminder that banks can change the rules, but you can still play the game smart. Because here's the truth. Debt isn't just about numbers. It's about peace of mind. It's about knowing you're in control of your money, not the other way around. So here's my challenge to you. Don't wait until October 1st to react. Take a moment tonight to look at your balances, your spending, and your savings. Ask yourself, if I had an emergency tomorrow, could I handle it without borrowing at 18%? If this video helped you see things a little clearer, leave me a comment below. Have you ever been hit with cash advance interest you didn't expect? How are you preparing for these changes? I'd love to hear your story. And if you're ready to build a stronger financial future, hit that subscribe button. Your subscription means the world to me. Together, we'll make sure you stay ahead of the banks and build a life where your money works for you, not against you. Thanks for watching, friends. I'll see you in the next one.